This video is brought to you by Moomoo. If you guys want to get up to $14,000 with 7 free stocks, you can do so using the link below in the description or pinned comment section. What is going on, everyone? Hootmoney here with another video for you guys today. Today, we are going to be talking about System 1 or SST stock, as I believe there is a strong possibility of a gamma squeeze leading up to the future monthly expirations in this stock. I'll be presenting all my evidence in today's video, so if you enjoyed this video, please leave a thumbs up. I'm waiting. Hit that like button, baby. It takes 2 seconds. It helps out the channel greatly. Subscribe to the channel if y'all are new and you enjoy the content that you are seeing here. And if you wanted to bag up with Hootmoney and other members, you can join Hootmoney Trade Alerts using the first link in the description, first link in the pinned comment section down below. You just saw some of the profit that we have achieved in there. I want you to come bag up with me and other Trade Alerts members. But with that being said, let's just jump right into it. So here is the Gamma Squeeze leaderboard on Fintel, and it identifies stocks that can undergo a gamma squeeze. Pretty self-explanatory. The current implementation looks at the change in open interest in short-dated puts and calls, which are monthly contracts. So these are the ones that expire towards the middle of the month, the Friday that is the closest to the 15th of the month, to identify stocks that are susceptible, to squeeze. And as you guys can see, SST is number 4 on this list. Now, this just looks at call open interest. What it doesn't look at is share availability and some of the short squeeze statistics. SST has some insane short squeeze statistics. So if we just move over to Ortex real quick, you guys will see that, yes, it's only at a 7% short interest percentage of free float. That's not crazy. Again, we are here for the gamma squeeze, not the short squeeze. But we're looking at some of these other stats. You can see cost to borrow is at almost 400%. 380% cost to borrow, and it's been at this price, right? It has been at a super expensive cost to borrow ever since May, right? It has never come down, maybe right here briefly in July, but it has barely come down. So this has a good potential a short squeeze, right? I mean, it's so expensive for shorts to keep holding this stock. It takes 8 days to cover. They're going to be wiped out within just like 3 months, 100% of their position. So it's of short's best interest to probably close because of those short squeeze statistics. Now, if we're looking at the gamma squeeze leaderboard again, and we're just looking at the top 5 stocks, none of these other stocks have the same lack of shares, same liquidity crisis that SST is undergoing. Revlon, it does have 0 shares to short. So the one stock here that could be doing something good is Revlon. However, this stock is bankrupt. I believe that they said their shares are worthless today. So that's why I'm kind of avoiding Revlon right now. Their company literally came out and said shares are worth 0. So I don't want to be behind that. Then we have HUSA, 40,000 shares available on that list, 124% cost to borrow right there. Claris Therapeutics, all right, 400,000. This one is number 2 on that gamma squeeze list, and it also has 41% of the float in the money. However, when you are looking at that 400,000 shares available, they have plenty of shares, right? And it's on a smaller float. Same thing with APDN, number 2 on that gamma squeeze leaderboard, 100,000 shares. So when we are going back to SST, they ran out of shares yesterday. They've got 10,000 shares today, the highest cost to borrow that we've seen, and we confirm that here on Ortex as well. If we're just looking at the gamma squeeze leaderboard, SST is undergoing the most extreme liquidity crisis here. And if we take a look at some of the options on this stock, and we just move into the monthly expiration of September 16th, you can see that there are 10,000 contracts that are currently sitting there in the money. Now, that is for each contract is for 100 shares. So you multiply that by 10, you get 1 million shares that would have to be delivered if by September 16th, this stock is above $10 per share. And right now it's at $10.22. Hey, Hootmoney from the future here. So I already touched on the $10 September 16th contracts in the video, but what I forgot to include, and this is probably more significant than those $10 contracts, are the $7.50 contracts. Because if we actually go back and look at SST, it has barely ever been below $7.50 since it's been trading. Barely ever. Tap below there briefly. And there are 750,000 shares, 725,000 shares that would have to be delivered if these expire in the money. And we are in the money right here by over $2.50 on the $7.50 call options. So there is all of that gamma exposure right there, right? This is an absolute ton of shares for this company to deliver. 725,000 of them, currently having the 4th highest borrow rate in the entire stock market. And there's barely been a point where there's even been 10,000 shares available to borrow. I don't think these call options are hedged. I simply don't. I mean, they've had 300% cost to borrow since the stock has gone up live. How are they hedging these options right here? I mean, they need at least 89 shares per call option. I just don't think they have it. If we move into the October expiration, they have 3,600 at $15 strike price right there. That is pretty far out of the money. That doesn't matter too much, but it gets really crazy here in November because there are already 8 million shares that are in the money. Some of them are at the 7.5 strike price right there. So that's about 600,000 shares that would have to be delivered for November. And there is an absolute mega gamma ramp here from 1250 all the way up to 1750. So this could be another 2 million shares that would go in the money. If we're looking at the free float of this stock, it's at 17 million shares. And again, if we looked at that cost to borrow, they basically have been paying a super high cost to borrow. It is super rare to find shares of this company, which is that whole point. And as you guys can see right there, 300% cost to borrow. We've already seen that. Moving into the IBKR short share availability, they've had little spike ups right here where they got up about 40,000 shares to short, but they used it up pretty instantly, right? Because obviously that cost to borrow is insane. They're just using those shares as soon as they get them. And it's basically been hovering between 0 shares to short and 10,000 shares there. So they just don't have shares. I mean, this is a liquidity crisis that we're looking at. Moving into the options flow, we are looking at option trades by institutions. We'll get into unusual whales, looking at all option trades in just a moment. Institutions last week on 8/16, which I believe was last Tuesday, they loaded up on $15 9/16 call options, $49,000 worth. So it's always a good sign to see that institutions are long. It's not as crazy as some other stocks. However, considering that there isn't even that much volume on this stock right now, I think that is pretty insane. Moving into unusual whales options flow today, it is 80% bullish. Yesterday, I believe it was slightly more bullish, but you can see this morning there were plenty of buy to open trades right here, volume greater than open interest, size greater than open interest trades that were sweep call options, $10 strike price for 10.21. And again, it just so happens that this stock is trading right at this $10 per share level. The $10 call options are definitely a theme here, and as you guys can see, if we move into yesterday's flow, it was even crazier, right? We got more $10 calls. These are for January of 2023. We didn't even go over that expiration yet. There were calls throughout the day. $55,000 worth of premium on this $1 call that expires September 16th right there. Now this might just be a synthetic option that the market maker is using that has a super in the money delta. If we just pull up that delta right here for the $1 call option, that is a 1 delta, right? So the market maker probably just writing these contracts in order to hedge, basically creating synthetic shares. We'll see how that works out. But again, all that really does confirm is that there is this insane liquidity crisis on SST currently. If If we're looking at the highest open interest increases, it was all call options. Every last contract that had high open interest increases on the day was a call option. There was the $15 916, the 1050 826 right there. That's just a weekly contract. Probably not a great thing. $15 1021, the $10 123s, and then the 1250 826. Again, I would not go for that contract. That expires within a week. One specific contract that I am looking at, and I have actually purchased myself, is the $10 September 16th, 2022 contract. And we're looking at an analysis page of it currently. And as you guys can see, on about July 26th right here, there was 4,400 volume on these contracts. And then the next few days, it goes up even more to 8,000. And then it goes up even more to 9,400 by 8/16, which was last week. And now this week, as of 8/22, there was another 1,000 contracts added to it, moving it up to, as of today, using the current volume on this contract, $10,291. Again, we pointed that out originally. That is for September right here, and that has been increasing even this week. Even with the dip this week, that contract has been increasing in open interest. Now, your risk here would be this max pain. The market maker will be trying to pin it at $7.50 by this expiration. And if we wanted to look at some of the other ones like October that has a bit more open interest, it's at $10. And then 1/20/23, that is also at $10. You can always just buy shares. You don't have to go for the call options. You still make money from gamma squeezes going for the call options. However, if you want to do the best effect on the gamma squeeze, you want to go for in the money contracts. So you either go for the $5, the $7, the $2.50, right? You stay deep in the money here. If you're on Webull, you want to be buying in this blue section, not in the black section. Even though the ones in the black section are cheaper, the ones in the blue section are what would actually force the gamma squeeze. Looking at implied volatility, you can see we are currently hovering over 150%. I believe it is slightly lower currently with this week's price action. At the money strikes are trading at 125% implied volatility. Regardless, it is on that spike up right now, and that does in fact give you some added risk, but we're looking for a gamma squeeze, so it would likely go up to 250 to 300% if there is a gamma squeeze on this stock. And implied volatility, for those that don't know, that is how market makers price the contracts. If implied volatility is very high like it is over here, contracts are more expensive. If it's lower like it is over here, contracts are cheaper. You want to get it under 100% implied volatility, but that will be pretty difficult, as you guys saw. At the money strikes right now, currently going for 125%. Still pretty cheap though, relatively speaking, compared to where it was at beginning of 2022 over here. One last thing that I noticed is that Fintel has the put to call ratio for each expiration, and what you want in a put to call ratio is a super low value if you're bullish, right? Because that means that there are way less puts than there are calls. So what we can see is that on 8/26, which is this week, the put to call ratio is 0.28. So for 28 put contracts, there's going to be 72 call contracts, right? Because it adds up to 100. So you don't really want that. That's a pretty high value. You want it to be as low as possible, as close to zero as possible. Next week, it comes down to 0.16. The week after that, it comes down to 0.17. So it's getting better. But then on 9/16, where again, 1 million shares are currently in the money, and this company literally has 0 shares, right? They have that insane cost to borrow right there. Well, on that expiration, it comes down to only a 0.4 put to call ratio. Moving into October, where there is slightly more open interest, you can see it is at 0. That is the best you can get for a put to call ratio. November, it has 29,000 open interest. By far the highest open interest expiration, besides for 9/16 right there. Well, roughly the same, right? That is at 0.5. So it is only looking slightly bearish here for the next few weeks. But the monthly expiration, which is the expiration that you would want to target for a gamma squeeze, that is where it really comes down. And then it stays down. Now, after January of 2023, that's where it comes down even more, right? If we're looking at February of 2023, way less open interest. And then they have 2024 as well. That's a 0.43 put to call ratio. I don't think anyone's going to be holding this until 2024 anyways. So that's not a huge deal. Anyways, my friends, that's about it for the video. I really like how this thing is set up. Not only does it have a decent amount of calls that are already in the money at that $10 and $7.50 strike price, but it also has some of the highest cost to borrow in the entire market alone. Actually, let me check that. Yeah, if we're looking here on Ortex, SST is the 4th highest cost to borrow in the entire market, sitting at 361%. So that's insane, right? These gamma squeeze statistics are absolutely unmatched. And I believe with retail's help in buying some more in the money call options or just shares in general, this thing could see an absolutely crazy gamma squeeze by September 16th, if not November, but we're looking for September. That's all I really got. Drop a like if you guys enjoyed today's update, and remember to subscribe to the channel if you want more content on stocks before they go up. Also, join Hootmoney trade alerts if you want all of my buy and sell alerts. I'll throw some profit loss on the screen right now. You guys can see for yourself that we are bagging up over there on Hootmoney trade alerts. So if you wanted to check that out, that is the first link in the description, first link in the pinned comment section down below. Anyways, that's about it. Sayonara.